Bitcoin continued to consolidate on Monday, ahead of U.S. debt ceiling talks with President Biden and Republican House Speaker Kevin McCarthy. It is expected that if a deal isn't reached this week, the government will run out of cash on June 1st. Ethereum was marginally higher. From the chart, it appears that BTC has now found a firm floor at $26,300, with prices hovering slightly above that point. In order for a significant move to take place, a ceiling of 44.00, or support at 39.00, on the Relative Strength Index, RSI, will need to be broken. At the time of writing, the index is tracking at 41.18. Ethereum.
We had some turbulence before because of questions about the U.S. debt ceiling in the negotiations. Of course, that seems to be progressing, but nonetheless, it had an effect on crypto. So joining us now to discuss is Tactive Wealth Advisor Eddie Gifford. Welcome, Eddie.
Thank you for having me, guys.
Glad to see you. So you see we had this drop in Bitcoin below 27,000, of course, but you don't think it's necessarily because of these negotiations between Congress and the president, but might have something to do with what's going on at Binance. That Binance paused withdrawals on Bitcoin earlier this month. Can you fill us in on that?
Yeah, I think there's a lot of drivers to volatility in general right now. I think it started a couple of weeks ago when we had the pauses on Binance, and it just shows that when there's a lack of liquidity, things can get really bad really fast. And that's not exclusive to Bitcoin. That's any type of risk asset in general. So, the fact that happened, and then we've got the debt ceiling on our hands, and then we have interest rates that seem to be probably staying elevated for longer than anyone wants to admit, means that we probably have more volatility in store. Now volatility is not a bad thing. The nice thing about volatility is when things go like this, it gives us an opportunity to buy. It gives us an opportunity to get in at a lower share price, potentially. It gives us an opportunity to trade. So there's a lot of opportunity here, but I think that, generally speaking, it's not without a ton of volatility because there is still so many things that are unknown.
I'm looking at the Fed Funds Futures tool on the CME website, and they're showing that the market expects rates to go down, certainly by the end of the year, definitely next year. Of course, the Fed does what it does, and maybe the markets will change its mind as data keeps coming in. But do you think that the crypto markets are paying attention at all to what the traditional markets, the traditional bond markets are saying is going to happen, which is that we might see more liquidity in a few months' time. So get ready, boys. Why don't you just all buy Bitcoin now? Why is that not happening?
Well, I think it's one of those things where we just have like these polarizing views occurring right now. We've got the bond market telling us, hey, blinking light, recession coming. We're in a situation where liquidity is coming back. But then we have the inflation story on the other side and the core inflation, which is super, super sticky, that's just not budging. And so, if Powell has said anything over the last 18 months repeatedly, it's that inflation is his number one priority, period. So if inflation continues to remain sticky, he's going to push us into a deeper recession than anyone wants to admit, just to get rid of the inflation, and then they'll cut. It's not whether or not they're going to cut in the future. We know that that's essentially the only tool that they have, is to raise rates and lower rates to try to spur demand on either side. So that's why we like the idea of, any risk asset. But the nice thing about Bitcoin is that it's finite in number. When you look at the dollar as an example, we're sitting here fighting to raise the debt ceiling, which is trillions of dollars, and that doesn't even include unpaid liabilities for Social Security and Medicare. And so, that devaluation is going to continue to occur over time with the dollar and with any currency where we have kind of this unlimited borrowing. And at least in Bitcoin land, right, there's a finite number. We have a halving event that's occurring next year. And when it comes to mining, there's only so much energy out there, right? So you can only mine so much. And so that kind of keeps at least supply in check, which gives you more long-term upside potential, whether you're using it as a medium in exchange, or whether you're using it as a hedge, or whether you're using it as a core of, a piece of your portfolio.
Well, those struggling miners would be happy to hear about that.
Yeah, definitely. We think that there's opportunity in the mining space more so now than there were a couple years ago, just because costs have fallen so much on equipment and those types of things. And from the standpoint of widespread adoption, clients are asking me that question more and more. Hey, what about Bitcoin? What about Bitcoin? And Bitcoin is obviously the entry to the rest of cryptocurrencies. And so that's going to be kind of the start. But if we can see widespread adoption over the next 3 to 5 years, we can see, some big home runs for investors that are getting in now.
Lastly, you've said that the tightening by the Fed is reducing liquidity in markets. We've talked a little bit about what that could mean for Bitcoin. Is this different for altcoins? We're seeing a lot of altcoins pop up in the news.
Well, altcoins are more of a spec investment, so generally speaking, right? So I think that, it's kind of crazy that you can start a coin and then it can be up like 1,000% 2 weeks later. We've obviously seen that last year in the stock market land from the standpoint of all like the meme stocks and everything that was occurring there. So, when I'm dealing with clients, we're looking more big picture. We're not really like looking into like the spec side of things. And so, we're leaning on level 1 and level 2. We're not jumping into a lot of the altcoins. Now, the reality though is that I think that the elevated interest rates, if they stay there, definitely do have an impact on who's putting money into altcoins for whatever reason, just because you can get a much higher interest rate backed by the US government. So there's that from like a risk-taking standpoint. And if liquidity does continue to tighten and if they keep the rates elevated and we do see more banks get into trouble, that's not going to be good for any risk asset, especially cryptocurrency, unfortunately.
Eddie, thank you for joining us this morning. That was Tactive
Novogratz's terminology in low liquidity. I mean, somebody's got to be there to lift the offer, right?
Yeah, I mean, look, we're in a situation of low liquidity, low volumes compared to what we've seen traditionally, but that's kind of typical when you're, not in a roaring bull market, and it's been a good couple of years now. So most of the institutions have more or less left the space. There's just not as much interest as there was, and of course the liquidity concerns are tied to this Operation Choke Point 2.0, as it's being called, the way that the US government is encouraging its regulators to kind of put pressure on banks that deal with crypto and that kind of thing. So, there are a lot of different players all sort of pulling back from the space. And as you quite rightly say, that means that Bitcoin is bound to be more volatile in an upwards direction, but also possibly, in a downwards direction. We're already seeing volatility rise, and it could get worse. So don't be surprised if we get, big moves in one direction or another. But actually, I'm bullish, like Mike Novogratz. Not perhaps as bullish as him. He's like, I'm totally bullish and investors are energized. Now, I wouldn't go quite that far. We're still just sort of days in this rally, but nonetheless, we're seeing bullish signs. We've seen Bitcoin react in a very positive way, despite all of that bad news that we've seen. It's looking good to me.
Well, Glenn, I've had so many conversations here in Washington about Operation Choke Point 2.0. That's something I've been hearing for weeks now. And it also suggests that perhaps in the longer term, the U.S. is going to be a less friendly place for crypto in general. So what fills the gap? What does that indicate about how long these liquidity challenges could persist?
It's a tough one because we just don't know what the US government is going to encourage regulators to do next, or indeed what the regulators will do off their own bat. We know that they're pretty negative and are bearing down on crypto. How much damage can they actually do? Potentially quite a lot. Let's face it, this is the United States we're talking about. It is the big kahuna country for finance throughout the entire world. And the dollar is the global reserve currency. All of this is crucially important. And yes, they really could bear down on Bitcoin. Okay, they're not affecting the price at the moment, But the whole crypto space is sort of running for cover. And until the crypto space sort of finds other countries that perhaps it feels more comfortable in, those might turn out to be the EU or even the UK, where I'm based. Over here, we're hearing much more positive sounds out of the government, or of course, parts of the Far East might turn out to be more hospitable. So it's not necessarily the end of the road for the crypto industry if the US turns against it, but it's certainly a major stumbling block, let's be honest.
Yeah, well, Glenn, you just said there essentially that policymakers and regulators to this point aren't affecting the price. So what is affecting the price? What kind of correlations do you see? How is Bitcoin tied and or not to the macro picture right now?
Right. Well, this is the good news, really, and it's partly why I'm still bullish on Bitcoin. It's because, as you rightly said, the stock markets are now, or Matt rightly said, the stock markets are now in more of a bull market than they were before. And NASDAQ in particular, of course, has been doing very well. And when you look at the correlation between NASDAQ and Bitcoin, the same correlation we've been talking about for more than a year now. It started in November 2021 when Bitcoin started going down along with tech stocks. The ups and downs kind of mirrored each other all the way down. And now, on the way back up, it's the same story. This is not a coincidence, okay? Investors have kind of put Bitcoin and Ethereum to some degree in the same pot as tech stocks. So they're considered, risky. They're considered risk assets now, certainly, but there's also a parallel story which kind of muddies the picture a bit, but is also good for Bitcoin, which is, of course, this flight to safety after the banking crisis that we had just a few weeks ago. Some people are now again starting to see Bitcoin as a possible monetary alternative to the dollar. And why do I believe that? Because look at the correlation between Bitcoin and gold. Bitcoin and gold, both rising. Gold is benefiting from that same effect of people fleeing to a different kind of money, and likewise people fleeing to Bitcoin at the same time. So you've got a kind of double reason really why Bitcoin is going up at the moment. On one hand, you've got tech stocks going up. On the other hand, you've got gold going up.
Glenn,
both of them are encouragements to the price.
Glenn, I learned very early on that you never share your private key with anybody. I had some Bitcoin stolen from me on live television about 10 years ago. Do you think that investors are moving a substantial amount of their holdings off of centralized exchanges and either keeping them, in cold storage at home or putting them in decentralized exchanges?
We certainly seem to be seeing a fair amount of that going on, yes. Is it enough to make a massive difference to the overall picture and liquidity? It's certainly making a difference, yeah. And but at the same time, it's a good thing, isn't it? Like you just said, not your keys, not your crypto, they always say. And that's true. And if people have learned the lessons from FTX, then that's a fantastic thing. And now, of course, with Binance, the CFTC coming down on Binance, people got scared again, withdrawing money from Binance. And of course, that's the world's biggest exchange by far. So as a crypto enthusiast, I really don't want to see Binance get into serious trouble or Binance to fail. That would be really, really annoying apart from anything else. We wouldn't be left with any massive exchanges. All we'd have left is Coinbase, which is far smaller.
All right, Glenn, I think you'd get a lot of pushback on that. Some people would welcome that turn of events, but they have to be the seriously old school OG crypto traders. Glenn Goodman, or holders, right? Or hodlers.